In this video, how to trade morning and evening star patterns. So these are 3 candlestick patterns, and essentially what you have is a situation where you get a couple of gaps, so 3 days, for example, where you get long candlestick. This would be bullish. This could be bullish or bearish in this example, and this would definitely be bearish. This is what is known as an evening star. It's out, it's nighttime, shows negativity, but you have the gap there and the gap there. The wicks can cross each other. It's just a matter of the gaps being there. Now, a morning star, of course, would be the exact opposite. And you can see that you would have a negative candlestick here, a candlestick here that could be positive or negative. That's the thing. The star itself doesn't really matter, other than it's very small compared to the other candlesticks, or it shows a lack of momentum, I should say. And then you have a gap above, and it shows a reversal. Now, these candlestick patterns, you have to think about what they show. Well, they show here in this one, we're in an uptrend, so we're going higher for a while, and on this day we get a bit of a move, and then we gap higher, and that should be a continuation of the trend, but things don't really take off that day, and then the next day it gaps down. Well, that's a sign that things could be changing. It's a very bearish signal. You simply put your stop loss on the other side of the 3-bar pattern, and you take a short based upon a break of the 3-bar pattern itself. So the longest candlestick, in this case, it would actually be underneath here. You would start shorting. Causes a little bit wider stops at times, but it's generally thought that you should get a bigger move. Now here in this one, the morning star, the star is going to rise. That's bullish. You can see that we drop. And then this day, things drop a little further. Then we get a little bit of a gap lower, which should be a continuation, but the market really doesn't move that day. Then the third day, we gap higher. Break above the top of the candlestick pattern, the 3 candlestick pattern, stop loss underneath it, and you swing for a trend change. So here is an example of a morning star. You can see that this candlestick was negative. We closed up here. We gapped lower, but we had a pretty tight range here and then gapped higher. You can see that was, in fact, the beginning of a pretty significant move based upon the morning star. You know, your first target would have been the next resistance level, very easily made. This resistance level, and then this resistance level. So certainly you hit all of your targets. Over here in Yum Brands, we have a evening star because we have a long candlestick here at the top of a trend. We have a neutral candlestick after the gap, and then we have a gap lower. So that is an evening star. Some people would even call it a shooting star. But in this case, since there's 2 gaps, it's technically an evening star. You can see that we fell right to where support would be, and then eventually broke down through it. Stop loss would go on the other side of the pattern like I had talked. In this case, you would take a break of the 3 candlestick pattern right there. You had a pretty quick move, about 1.5 times your risk, and then you eventually broke down rather significantly. These are generally only found on daily charts because of the gaps needed, but unless, of course, you're trading a very illiquid stock in a short time frame, then you can see these all over the place, and they don't mean as much. You do need a liquid stock, something that trades decent volume. Both of these, Hyatt and Yum Brands, would certainly fall in that category.